Audio morning brief for the U.S. stock market. It's 8:04 a.m. Eastern Time, February 2nd. I'm Rich Paz for Critical Point. Fantastic trading yesterday. The market basically rejected the prior day's decline after the Fed Reserve. Yesterday morning, the cash market opened a little higher in respect to the overnight futures. It dipped a little bit, made an attempt to fill a gap, did not completely fill it. It's so small and the market has rallied so far that I think that gap is meaningless. But if the market were to come down near it, it will probably become a target for some people betting on the downside, okay? Now, yesterday it rebounded, filled some of the gap created from the prior day off of that Fed Reserve selling. And then after market hours, some of the stocks went up. The stock index futures shot up. They've been up as much as 30 points overnight for the S&P 500. And that was due to some good earnings of some companies. Even those companies that didn't have good earnings, there was some other positive news mixed in. Even Apple, even though they took a hit in China, they showed that it could still crank out sales in the rest of the world. But overall, the market liked what they saw, and I think what they woke up to is they made a mistake on selling off on the Fed Reserve, that was too much about macroeconomic speculation and not enough about real business, where are these companies going, how much are these companies worth stock-wise. I also think yesterday's rebound that those who sold the prior day in the Fed Reserve, they bought back 80 to 90% of what they sold. They didn't get 100% done. They're running behind. I think some of them had a good plan and made a lot of money to the downside and made a lot of money to the upside. But I think for some of them, they had a good plan, but it didn't go the way they thought. They haven't made the money they thought, and they may even have a net loss after the 2 days of trading, and they're running behind. I think there's bulls and bears are both running behind, which tells me we can get more buying, that the bears will have to protect themselves and buy. The bulls are upset that they probably let go some of their stock, didn't get it all back. They got to buy, and then on the sidelines for the long-term picture, there is a huge amount of money that can come into the stock market. So I'm starting to think this market might actually surge, literally race to the upside here in February, up to that 50-13 target. And I now have a new set of targets that if it goes to a new high, for a new record high, that it will generate objectives of 5,000 to 50.18 to 50.37 for the S&P 500 cash. And the futures are confirming that, and you just add the premium currently between the futures and the cash, just subtract the two. You can add that premium to the cash, and that'll give you the upside targets for futures. What this does is give us a different calculation that actually confirms our 50-13 target. So I think this market's going to 5,000. I think it's going this month, and it may even go higher to much higher than that. But I can also see things going wrong that kind of stall us out and not such a brisk run up. I'll be fine with it. What would be discouraging is we just don't do anything for this month, and it's more sideways. Therefore, we want to look out for that if it trades below yesterday's lowest price, and I'll see if I can give you that off of this intraday chart. If it goes below 4845.49, we'll be able to come up with calculations that suggest the market going back to 4750 to even closer to 4700. So I've given you some downside potential possibilities to watch out for, but the best picture is to focus on the upside possibilities. And I believe the current record high to watch to trigger these upside objectives is we need trade above 4931.09, okay? Now, we do have the gap off of the Fed Reserve to play around with this morning. If those futures stay up like they did overnight, and at 9:30 a.m. Eastern Time, the cash will match it, then we're going to have yet another gap in the cash. Those two gaps might cause some people to think that's a bullish island reversal, but it's huge. And I really think the stock market, I think, looking back over the last 10 years at least, they'd really like to wipe out bullish island reversal. So I don't think it's really there. I don't think it's really going to work. We don't need it. We got enough other bullish information here. And in fact, if they pull it back, fill that gap immediately and move higher, I think it's still kind of a weird bullish line reversal. I think it's a positive sign here. And to see the market recover this quickly, the very next day after dumping stocks off of the Fed Reserve, tells me that, yeah, people got their head squared away here and said, really, these Fed Reserve stuff, it doesn't matter. They're just little increments to trade very fast. And overall, the Fed Reserve really didn't change anything or do anything. It's almost like they don't know what to do, but they just want to wait a little longer is what they're implying in terms of lowering interest rates. And I'm all good with that. I'm fine with that. And I think the market understands this. It's okay with the current interest rates. And the free market, bond market, is actually lowering interest rates anyways. They're doing the job we want the Fed to do. And they're helping the economy, and they're providing some safety here. So it's working, okay? You could argue yesterday that the stock market suddenly woke up. Josh, we should not have been going down while interest rates are going down. We normally do the opposite. What are we doing here? So I think yesterday was a good wake-up call and a beautiful rejection of the Federal Reserve, the selling by investors on Fed Reserve. They got carried away. They made a mistake in terms of bigger trends and long-term. But on a very extremely short-term basis, they probably did the right thing. They were just following what they learned from prior Fed Reserve meetings, and the market actually dropped about the same amount when they sold other Fed Reserve meetings. Kind of bizarre action here of what people learn and how they trade. All right, so now we need to think in terms of the dollar has probably topped. I think the dollar index is heading lower the next few weeks. Not convinced that really is a positive thing for the stock market, but the way I look at it, it's not a negative. It can be a positive thing overall, I think. And the gold may be able to rebound a bit here just because of lower interest rates can help out. But they got to keep an eye on that real interest rate too. So I don't know how well it can really rally. And crude oil is backing off, so that still continues to help the economy and stock market. And I really don't have any significant signals there. And even if it rebounds, that's okay. I think in a few weeks, oil can still back off. And it's basically just going to move sideways and stall around. So in the interest rates, which is more important than all the other outside markets we watch, for the stock market, that is. The interest rates, I think, can recover some next week, and so bonds slip back, but I think it's more of a correction thing. I think the bond market wants to keep rates below the Federal Reserve by a significant amount, and it wants to continue to bet that long-term it will go lower, interest rates that is, bond prices higher, that we're in a long-term bull market for bond prices, long-term bear market for interest rates. And the reason is the Fed will eventually lower rates. They're very, very confident of that. And so right at this moment, even though I suppose interest rates could slip some more, I think we're going to see a little stability and rebound, but I'm not convinced that's going to bother the stock market. I think the stock market is pretty determined to do what some of the seasonal people claim as first half February as a strong up move and second half Feb a strong down move, and then some weakness in March as well. My guess is the market's going to stay up a little longer than these seasonal people are looking at in terms of their average studies. I'm going to stay with the forecast. This market's going higher into the week of February 19th. It may even go higher into March, and March is the time for a setback, but we'll see. It may start a little sooner. Otherwise, I am bullish. The long-term trend is intact. And I think we got higher to go here for the stock market, and the daily and weekly charts look fantastic trend-wise to be able to have this little correction here, reject it, and already fully recovered. I just think it's time to rock and roll for the bulls here. They're going to move this market higher. I really like that 5,000 plus target concept here near term. Past results and on the indicative future results. Have a great weekend. Thank you.